The stock market has reached a fever pitch as Anthropic seeks to raise funds at a staggering $900 billion valuation, eclipsing OpenAI. This monumental shift in the tech landscape has left investors and analysts alike buzzing with anticipation. Let's break down today's developments. On April 30th, 2026, Anthropic announced it is in discussions to raise funds at an unprecedented valuation of $900 billion, surpassing OpenAI's previous record. This news came to light at approximately 10 a.m. EDT, sending shockwaves through the tech sector. The announcement was made just hours before the U.S. markets opened, leading to a bullish sentiment among investors eager to capitalize on rising valuations. This surge was fueled by strong performances from major tech companies, notably the Magnificent Seven, which includes industry giants like Alphabet and Amazon. By 11:30 a.m. EDT, S&P 500 futures were up an impressive 2.5%, reflecting the optimism stemming from these developments. This situation is particularly noteworthy as it marks a significant shift in the tech landscape, with Anthropic's valuation symbolizing the increasing dominance of AI companies in shaping the future of technology. Historically, tech valuations have fluctuated, but this leap is unprecedented, especially given the backdrop of ongoing discussions around ethical AI and market stability. The tech industry has seen rapid advancements in AI technology, prompting both excitement and concern among investors and consumers alike. While many view AI as the next frontier in innovation, market enthusiasm is tempered by regulatory scrutiny. Authorities worldwide are increasingly focused on the implications of AI, considering the potential for misuse and ethical dilemmas that arise from its deployment. This scrutiny has led to intense debates about the need for comprehensive regulations to ensure responsible AI development. The juxtaposition of soaring valuations against regulatory concerns creates a complex landscape for investors and companies alike. Furthermore, the implications of Anthropic's valuation extend beyond financial markets. It could set new benchmarks for emerging AI startups, influencing their funding strategies and innovation trajectories. As companies vie for investment, the competitive dynamics within the tech sector are likely to intensify. Looking ahead, all eyes will be on how Anthropic navigates these discussions and whether it can maintain investor confidence amidst growing regulatory hurdles. The company's ability to address ethical concerns while driving innovation will be crucial in shaping the future of the AI landscape and its economic ramifications. The significance of Anthropic's recent valuation cannot be overstated. The company's impressive rise to a staggering $900 billion marks a major milestone not only for itself, but also signals a potential game changer for the entire tech industry. This remarkable valuation reflects a burgeoning investor confidence in artificial intelligence and its myriad applications across various sectors. As companies increasingly harness AI to enhance efficiency and drive innovation, the implications of this trend extend far beyond just one firm. The immediate consequences are evident in the stock market, where S&P 500 futures surged sharply after the announcement, indicating a broader bullish sentiment among investors. The tech sector, especially companies engaged in AI development, stands to benefit immensely from this newfound optimism. This development occurs against the backdrop of significant global economic shifts, including the UAE's potential exit from OPEC, which could reshape energy markets and influence energy prices. Such geopolitical changes add another layer of complexity to market reactions, creating a unique intersection of technology and global economics. Over the past year, we have observed a significant surge in AI-related stocks. For instance, Alphabet's recent cloud growth has bolstered its stock performance, while Amazon has rebounded after a period of volatility, highlighting the resilience of tech companies in an evolving marketplace. For the average person, the implications of this shift are profound. It signifies a transformation in job markets, investment opportunities, and the technologies that may define our future. As industries increasingly adopt AI solutions, workers across various sectors will need to adapt to new realities, emphasizing the importance of continuous learning and skill development. This transition could lead to the creation of new job categories while rendering certain roles obsolete, necessitating a workforce that is agile and equipped for change. Looking ahead, the rapid evolution of AI technology suggests that we are only scratching the surface of its potential. As companies like Anthropic continue to innovate, stakeholders must remain vigilant. The next few years could witness a dramatic reshaping of industries, fundamentally altering how we work and live. With this in mind, investors and workers alike should prepare for an era where AI becomes an integral part of everyday life and business operations. The road to today's stock market surge has been paved with both challenges and opportunities. Recently, the tech sector has faced a volatile landscape, significantly shaped by the banking crises of 2023. The collapse of several banks triggered a sharp decline in stock prices, leading to widespread panic among investors. However, amidst these setbacks, the introduction of advanced AI technologies, particularly with the rollout of ChatGPT-4, has revived investor interest. Major companies like Microsoft, which heavily invested in OpenAI, have seen substantial stock gains as a result of this technological advancement. The context of Anthropic's current valuation stems from a series of strategic decisions made over the past year. Aggressive funding rounds and partnerships with leading firms have bolstered its market position, positioning it as a key player in the AI landscape. Furthermore, the tech sector's resilience amidst fluctuating interest rates and global economic shifts underscores the growing reliance on AI as a cornerstone of future innovations. The Federal Reserve's decisions regarding interest rates have created an unpredictable environment, yet many investors view AI as a hedge against economic uncertainty. Previous market corrections have often led to rebounds, and the current wave of optimism reflects a belief that AI will drive productivity and growth in the coming years. The surge in AI adoption across various industries indicates a transformative shift, prompting companies to integrate these technologies into their operations. Looking ahead, as companies continue to invest in AI and related technologies, we can expect further consolidation within the sector. This ongoing advancement in AI capabilities will likely reshape industries, creating new opportunities for growth. With investor confidence surging, the current stock market surge may signal the dawn of a new era characterized by sustained innovation and economic expansion driven by artificial intelligence. In recent days, Anthropic's valuation has reached unprecedented heights, sparking significant interest across the technology sector. This landmark valuation not only highlights the growing confidence in artificial intelligence, but also reflects a broader trend of substantial investment in AI startups. As companies race to harness the power of AI, Anthropic's success could set a precedent for future funding rounds in the industry. The current market is characterized by a voracious appetite for innovation, with venture capitalists eager to capitalize on the transformative potential of AI technologies. However, this rapid escalation in valuations raises important questions about sustainability and the potential for overvaluation. Investors are increasingly aware of the risks associated with inflated stock prices, particularly in a volatile economic climate. Should funding discussions yield positive results in the near term, we could see a surge of capital flowing into AI-related initiatives, driving tech stock prices upward. Conversely, if economic uncertainties persist or regulatory frameworks tighten, a pullback in tech stocks could ensue, potentially destabilizing the broader market. Moreover, the Federal Reserve's monetary policies may need to adapt in response to these evolving market dynamics. With global factors, such as the UAE's potential exit from OPEC, impacting oil prices and inflation rates, there are multiple variables at play that could shape the investment landscape. Analysts are keenly observing the upcoming earnings reports from major tech companies, as well as regulatory announcements pertaining to AI technologies. As we look ahead, the crucial question remains: will Anthropic's remarkable valuation pave the way for a new era of AI investments? Or will it serve as a cautionary tale of the risks intertwined with rapid technological advancement? The next few months will be pivotal in determining the future trajectory of the AI sector. As we consider the potential outcomes, will Anthropic's valuation pave the way for an AI investment boom, or will it expose the dangers of market speculation? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the latest news.